Hello and welcome from whichever side of the world you're going to watch this. The markets currently at the moment have a lot of fear. People are in panic. Microsoft is down 15, Google 22, Apple 27, or most of the stocks in the Nasdaq, most of the stocks in the S&P 500 in the red. But this is an opportunity. This is a once in a lifetime opportunity to buy stocks at a lower price. Now, if you look at what happened last week was one of the wildest trading weeks we've had in the financial markets for a bit of time, especially after Liberation Day, whereby Trump did enact a few reciprocal tariffs in a bid to lower the trade deficit of the United States against other countries. Now, it's starting to work for some people. Vietnam have come to the table. We are waiting to see what Europe are going to enact in the next 15 days or less, whereby we do anticipate they are going to have also their retaliatory reciprocal tariffs. China are fighting so hard against this. It's a full out trade war. But what are these tariffs going to do to a particular economy? It's going to correct the trade balance. As you see here, the United States is dependent on imports from Mexico, China, Canada, Germany, Japan compared to their exports. Now, this brings a huge trade deficit. Now, the tariffs want to bring these numbers down, to bring people onto the same table whereby we need to have at least a plan that works for both of us compared to one side gaining more than the other party, where US feel like it needs to have the upper hand in terms of bringing parties to the negotiating table. It will also revive domestic manufacturing. If you look at Detroit used to produce one of the best American muscles, but because of China producing much more cheaper competitive vehicles, the markets in the United States did take a dip. When you look at Tesla's stock is nearly down 20%. Now, this is a good opportunity for you to buy the dip because of what these tariffs are going to do is going to enable a revival in the domestic manufacturing sector in the United States, especially with companies like Tesla. Now, it's also going to bring about economic nationalism. It's the people of the United States that voted for Donald Trump. Now, what this does is favor his own people, the people who gave Donald Trump the vote to be in office today, and the tariffs are going to impact that by we want to favor our people more in terms of manufacturing compared to other countries. Now, if you look at commitment of traders, this was very interesting to note out. Look at how many positions were added to managed money. Almost 24,000. This is one of the largest spikes we have seen being added to the commitment of traders in a very long time. Now, this is data as of 1st April. Now, when you look at the calendar, the tariffs did come in on 2nd April, meaning institutions had already planned out for this, whereby they added more short positions on gold and they offloaded more long positions on gold, meaning in the short term, we anticipated that the prices of gold were going to fall drastically, of which that is what we saw from last week. Now, moving on to this week, after the NFP numbers were released last week, and Jerome Powell speaking about the financial economy, he did say the tariffs were going to be transitory, meaning it's going to bring in inflation here and there, but not in the long term. It's not something to be very cautious. The markets have triggered the market crash threshold whereby stocks have been tanking very drastically, and it's very alarming. We would want to look at the inflation numbers this coming week, which is going to be released on Thursday, we do anticipate that the inflation numbers to continue dropping to around 2.6% for the year, but we want to see inflations, according to the forecast, picking up to nearly 0.3% in terms of the core CPI and the CPI itself, 0.1%. Now, the difference between the two is very, very interesting, because if you look at core CPI, the index that usually excludes food and energy, we anticipate it to climb. But when you look into food and energy, we anticipate these numbers to come out slightly lower. Now, Trump is very, very, with the tariffs, there was this article I was looking at, and egg prices came down 50% when Trump reached office on January, towards the end of last year. By January 21st, the prices of eggs were $6.55. On March 28th, it was more than half of 50% decrease, now retailing at $3. Now, this is the purpose of what this is what he has in plan for the American people. This is what he would want to do in terms of the automobile sector, in terms of the trading sector, in terms of the technological sector. These are some of the things that he wants to impact. We do anticipate the numbers for inflation. Now, remember, food and energy is directly corresponding to inflation, because if the prices of food are high, it means inflation, it's really high. But when the prices of food are low, according to the forecast that we are looking at currently at the moment, we do anticipate that, okay, maybe what he has in plan will start working out. Now, moving over to the charts, starting over with XAU USD. Let me remove these drawings. This is on the monthly candlestick. I would want to go to the daily perspective. Now, ever since Trump's tariffs, which was Wednesday, toward Wednesday evening, on Thursday, the market tanked nearly 6.5%. Now, this is not a lot. Yes, it's quite significant, but it doesn't trigger the 20% that we need for a market crash. Now, looking at S&P 500, I remember doing this analysis. Who knew that the market could trigger more? I do believe we triggered the 20% threshold yesterday for this to be considered a market crash, whereby the market tanked nearly 21.91% in less than 34 trading days, which is very alarming. But this is an opportunity for you to buy the dip. The most of the times that we have seen, over 14 times in the past, whereby the S&P has gone below 20% of its original value, the markets usually recover. If you look at this small leg here, this was less than 10%, the market recovered. If you go back to COVID times, the markets did tank. I do believe it was this region here. The market tanked for nearly 35 days. The market tanked nearly 34.9%. But look at what happened eventually in the near future. In the next, let's say, 658 days, the index gained more than 117%, going to all-time highs. If you go back to 2008 crash, this is what happened, whereby there was housing crash in the financial markets. The markets took nearly 210 days to find the bottom, whereby the index lost at least 50% of its value, and it did recover over the next, from 2009, in the next 10 years, the index recovered more than 351%. So what you're seeing right now is all about market cycles. This is it. This is the time for you to be involved in the financial markets. This is the time for you to get to understand the market cycles. This is the time for you to buy stocks at a very cheap price. When you're looking at Nasdaq, the same thing, whereby we've had the market crash threshold being triggered, which is around Nasdaq has lost almost 26.76% in the last 56 trading days, which is quite significant of the total index. US 30, this is something positive to look at today. Today's trading candlestick, this week particular, whereby we have started, could we have found the bottom at around 36,410? Only one way to find out. I do anticipate that prices will stay around this region, for a bit of time more, so that when it does pick up, it shoots like an arrow. So this is what I would anticipate with the financial marketplace. Currently, at the moment, this is the time for us to be looking for money. This is the time for us to plan out our buying only strategies in the next few trading sessions, in the next few trading months, so to say. Now, when you're looking at Russell has taken one of the biggest hits ever since November 2024, whereby also we did trigger the more than 20% market crash threshold, whereby the index has lost more than 29.21% of the total value in less than 140 trading weeks. Trading days, so to say. Now, the Russell is small caps. This one usually looks at the middle income, and it's in very bad trajectories currently at the moment, but this is an opportunity for us to continue buying into the marketplace in anticipation that in the near future, after we finding out the bottom, the market has a very high probability of continuing to go and form all-time highs. When you look at oil, oil is directly corresponding to inflation, and as you can see, the prices of oil plummeted. It has plummeted ever the highs that was made on March 2022. This was the peak of the wars, whereby people were very skeptical about the geopolitical situation in the Middle East, in Ukraine and all that. Look at what happened. The prices of oil has shot down to nearly 62, currently trading at $63.7 a barrel, which is worrying because if prices of oil are too low, it means that there is no money in circulation, and this is a commodity that most of the people, if not all of the people, either directly or indirectly consume on a particular day. WTI, the same thing, whereby we have been seeing prices plummet. Now, this is very normal. Whenever the markets has signs of recessions, usually the prices of gas, um, as what the Americans call this, gas or oil prices usually take a very big beating. Now, Western Texas oil is trading at $60.2 a barrel. Brent oil is trading at $63.7 a barrel. Now, when you're going over to the dollar index has been losing strength ever since January, somewhere about that time when Trump did mention about his oncoming tariffs the earliest. So in the past seven trading days, the dollar index has lost almost 8.15% of the total value. But could this be that we are finding a bottom very time soon? No one knows. For the ball has to bounce, it has to reach the bottom for it to bounce back into the near future. Now, looking at the dollar index, yes, I'm still looking for more shorting opportunities in the short term, but in the long term perspective, I want to be very bullish on all of these assets because this is just one of those market cycles whereby the market, there's a very high possibility that it will recover in the next few trading months. Now, the volatility index yesterday shot crazily to times whereby nearly COVID, to times of the last time we were in this territory was around COVID region. The last time was the geopolitical wars around August, somewhere there, Middle Eastern wars. We tapped into 60.19% of the volatility index. Now, how do you analyze this data? This means that there's a 60% chance that the market can move either direction in the next 1 year. But as soon as it made that high, when the markets opened around somewhere around 10 a.m. UTC plus 3, the index started returning those numbers back to manageable figures around 40. Yes, it's still high at 40, but 40 is much better compared to 60. Now, I'll be monitoring the volatility index. It's a good mathematical formula to indicate where there is potential market prices will head towards next. Now, looking at BTC, this is very interesting because most of the markets are crashing aggressively. All of the assets, when especially the dollar denominated assets, they have been crashing very aggressively. But when you're looking at Bitcoin, Bitcoin seems to be holding relatively well compared to other assets. Yes, it's been losing values, but this is just more of a short-term retracement whereby if the market makes all-time highs, there's a very high possibility that the markets usually retrace back to find some more liquidity for a further push to the upper side. But if you compare Bitcoin and let's say the S&P 500, Bitcoin is relatively calm, so to say. It's only lost 14% in the last 4 trading days, which is not that bad. Looking at it at 79,000, it's holding relatively well compared to other trading assets. Now, this could be very important because this shows you that, yes, within the economic uncertainties within the markets, crypto is still holding its value really good. Now, this could be good for us because it shows you that, okay, the markets are favoring crypto, and in the near future, this is just one of those market cycles whereby we might go back and take out all-time highs, which was more than 100, nearly $110,000 per Bitcoin. Now, moving on to Euro USD, the markets have been very quiet. Of late, we have been having this region here whereby on Thursday, as a result of the tariffs, yes, the euro did gain against the dollar quite significantly, more than let's say approximately 3% of the total value. But we have seen the market correct that move, and we are in this period of indecision right now whereby I would want to wait for the markets to play it out. As you can see, I don't like trading markets whereby we have longer wicks and smaller bodies. Usually wicks do the damages, bodies represent the move. So we can see right now the markets are in a bit of indecisive movement. I would want to wait and see, but currently I might look into buying opportunities for Euro USD in the short term, targeting maybe we might come check out these highs. We don't know if we have found the top on the Euro USD currently at the moment. Now, moving on to British pound against the United States dollar, same thing happening with the price action similar to Euro USD. I'll want to weigh these out currently at the moment and wait and see. Wait for prices to react, then I react to prices. Now, pound yen, similar scenario. We have been in this channel for quite some time right now, and whenever the markets are in these indecision channels here, wait it out, wait it out. Prices are preparing to do something. As you can see, this was last year, August 2024. On the daily, I would want to see a clear breakout of structure either to the upper side or to the lower side to find opportunities in the markets long-term based. Looking at USD Swiss franc, this was the analysis we had recently. We might be taking out the lows very soon. These lows at around 0.84006. Currently, the United States at the moment, people are still digesting the information about the tariffs, looking at potential retaliatory tariffs from other countries, especially China. The European Union are supposed to sit down somewhere next week between 15th and 16th, where we do anticipate for them also to come out with their retaliatory tariffs, or are they going to come to the table, to the negotiating table, and talk about what is going to work for both of them? So currently at the moment, we are going to be paying more focus to the macroeconomics, the tariffs. We are going to be focusing more on the inflation numbers compared to technical analysis. This is going to give us our entry and exit points, but currently our basis, whatever direction you want to look at the markets right now, it's advised that you based it off fundamental analysis first. Look at the data, digest the data. What does this mean for us as a nation? What does it mean for us as a whole globe, a whole marketplace? Where are we headed to in the next few? So USD I would want to weigh this out also, because one thing I've noticed, whenever the markets have made such a big move, it usually takes a bit of time for it to recover. Whenever the market makes an impulse, it usually goes through a corrective phase. Now, within the corrective phase, this is where most of the traders do end up losing their money because of poor risk management, whereby the markets could be very manipulative in terms of the wicks. So I would advise this is the time for us to look at the charts, create a plan, start backtesting on strategies that are long term. Buy now, say later. USD Chinese yuan has been really strong. As you can see, we have started, we've just broke out of the region of this resistance region that was created back in January 2025, where the market started crashing. But today the market has opened above that region, which is quite significant, which is something to note out in the financial marketplace, whereby the USD is currently trading higher than the Chinese yuan compared to what it was when the markets initially started crashing back in January 2025. Looking at USD yen, I wouldn't want to look at opportunities at USD yen currently at the moment, but there's a high likelihood that we might come take out these lows in the near future. But currently at the moment, this is an opportunity for us. As you can see, prices did change character, whereby we had this massive bearish candlestick closing below the most recent lower high, lower low that was created in the markets when the markets were trending to the downside at this region here. So this was a lower low, a lower high, a lower low, a lower high. This was the most recent lower low, a lower high. Now the market has broken the most recent lower low that was created back in March 2025. This could be just a short-term retracement. If I was to speculate on these markets, I would want to wait for a short-term retracement or have a very tight stop loss around that region there, targeting these lows at 140.159. Moving over to USD Canadian dollar. For the currencies, I want to be more of looking into price action. I don't want to be speculating more, but if you look at the daily candlestick, this is quite interesting to note out, whereby we don't have any wick to the top side, which means this could be inefficiencies at this region, where if we do enter a buy position, a short-term buy position, we do enter a long position just around that region there, our stop loss just below those lows, and our target on those regions of inefficiencies. This is a risk to reward ratio of nearly 1:6.8, which is quite decent to get a target for the day within the next 12 hours, 29 minutes to go. I will enter this position, stop loss just below the lows at 1.41468, target at 1.42474, which is quite decent. Now the risk to reward ratio has changed because of adjusting the stop loss and take profit. This is something I want to participate in today. Anything above a 1 is to 2.5, I'm going to take that particular trade on a daily basis. That is a good risk to reward ratio. As a result of my strategy that I've backtested for quite some time, I know that it's very high likelihood that for me, I can manage to get a 1:3 RR on a particular day. Now, moving over to the Nikkei index, the Nikkei index has slumped when you're looking at it on the daily perspective ever since March 2025. We have seen nearly 20%. This also triggers a market crash threshold for the Nikkei index, meaning that things, okay, in the near future, this is an opportunity to buy most of the stocks. The last time we were here was back in August. This was when Japan did start to raise their interest rates, and we did see a lot of money leaving. There was a lot of activity in the financial marketplace when Japan did increase their rates from negative to higher rates, interest rates. Around July 2024, we did see the markets make this massive move. Yes, we did correct. We did recover more than half of the total index that was lost during that period. Yes, around more than 50% of that region, but the markets have actually gone back down to create relatively equal lows that was created during that period. Now, this is very interesting, very interesting. This is a further opportunity for me to buy more stocks in the near future, anticipating that, yes, how long did it take for these prices to recover? More than halfway, let's say around 72 trading days. Now it can take more or lesser time for prices to recover this, but in the near future I would want to see prices of Nikkei gaining further to the upper side. Now Tesla is down 40%. This is an opportunity, once in a lifetime opportunity to buy the dip, whereby we did see stock prices at around 490 back in December 2024. Right now, we have lost more than half of the total value of the stock prices, but this is an opportunity for you to buy more Tesla stocks in the near future, anticipating that prices will actually come under correct themselves in the near future. As you can see, this is already a risk reward of 1 is to 5, which is quite decent in the financial marketplace. Now the DAX also did take a plummet, but at the moment the few days, yesterday and today's trading days, have brought some hope back into the market. It has brought some, okay, things might, yes, we are looking at very red numbers currently at the moment, but in the near future, this is the opportunity. The one takeaway I can take away from this is that this is the time. This is the time to get started in the financial marketplace. This is the time to look for money. This is the time to invest, buy stocks at cheaper prices, invest in the long term. Plant a seed today that in the near future you are going to reap fruits. And not only you, but you and people around yourself also, because what you are doing today is for the generations to come. What you are doing today is for the near days in the future. And this is an opportunity. Whenever you see stocks plummeting, whenever you see fear into the marketplace, this is a good time for you to buy into the fear. The millionaires are made when the majority are fearful. Tafakari ya babu.